Good morning, traders. It is Thursday, September the 5th. We got a pretty wild day in the market again today. It's been going on for about over a month now. And today could be a big turning point for the market, and it's going to catch a lot of people off guard. Going to be a very emotional day, I think, the start of something pretty big. And we've been talking about this for a little while now. Whichever way this market breaks out of this August sideways range is going to be very significant in terms of how quickly it's going to move and how it's going to affect other things. Now, more or less, if we were to just zoom into the market here, we talked about this yesterday, how the momentum had been shifting to neutral, the orange bars here. Let's just zoom in a bit more into orange bars and went green, and how we ended up getting closed out of our SH yesterday at the close. The market closed above our stop level because the momentum has shifted. We're holding up above the average price here. And with the stock market does break and pop to the upside, we've talked about how it's going to definitely put a downward bias in bonds, utilities, and precious metals. And our upside target, if we were to throw a Fibonacci extension, we did this yesterday, but we go from the low up to this high, down to this low here, we've got potential for the market to rally up. It's got its bull flag down into the 20-day moving average, which is also support. And we've got price running up into this area with an upside target around 29, more or less the 3,000 mark, which is a previous significant high, right where the market changed trends before. And so this morning we're seeing a huge move up in equities. Pre-market price is already trading up right about here. So the market always has a way of trying to avoid the average person from getting in and from taking advantage of these moves, and it's doing that today. So we've seen this range. If we break out of this range in either direction, it's going to be a powerful move. But the market has a way of bridging and doing almost half of that move up to our upside target is going to happen at the open today, and it's going to be an overbought market. Almost all the opportunity is gone for the quick explosive breakout move, and the downside risk is down here where our green hashtag is, meaning we've got this little bit of potential upside and we got all this downside with this gap up. And again, as you know, I don't like big gaps to the upside into overbought territory. Gaps tend to fill, which means we could come back down and fade it, potentially fade even more and come somewhere down, maybe to this 20-day moving average level as a support. So there's a lot of risk jumping on board at this price level when it gaps up today. And this is what the market loves to do. Very tough to trade. Sometimes we can see the patterns. Just because big moves happen doesn't mean we can always catch them unless you want to be really high risk and chase trades, which I don't really like to do. So that's where we're set this morning. Let's take a look at the futures and the daily chart. Here is the daily chart. You can see this big strong pop to the upside at 3,000 is the upside target for the momentum breakout. If the momentum breaks, which it is at this point, 3,000 should be hit probably within a day or two. And again, a huge chunk of that move taking place already this morning without the majority of traders and investors, because most of us trade regular trading hours, not so much the futures. So with the with the U.S. equities moving up, we are seeing money flow out of the safe havens today. If we take a look over at bonds, moving down 0.6%. If we take a look over at gold, down 0.6%. If we look at silver, down 1.2%. And we've been trimming out of all these plays. If we take a look over at gold, we got out right near the high, and the high again there yesterday, and scaling out of these positions, anticipating we could see a big crack in a pullback. And we'll see how much of a pullback we get, but overall there is potential all the way down to this 50-day moving average down here, which would also be somewhere around this breakout point where the market kind of broke out of this consolidation and started to have this really powerful move to the upside. So there is still quite a bit of downside potential, which is why we've been trimming off our positions. We locked in almost 10% on gold yesterday. We locked in a couple other positions the day before. We locked almost 10% on natural gas yesterday. If we take a look at TLT, it's been holding. It's going to be trading down around the 20-day moving average this morning. We could easily see this continue to move down. So we've been tightening and blocking in our gains, knowing this is a high probability with the momentum shifting. higher in stocks means we're going to see these safe havens pull back. So let's go take a look over at uh, the precious metals again here. If we take a look here, we're seeing them start to pull back. There's a lot of downside potential or consolidation phase. This is the big question. Are we going to just see gold consolidate like we saw over here where when the market got overbought, we saw it really just consolidate until the next till the stock market got a little overbought, and then we start to see this take off again? Are we going to see that same type of thing here, some type of consolidation through here before it goes higher, or is it going to correct deeper with a three-wave correction, really cleanse the market out, and then set us up for another move? And that's what we don't know, and that's why we've pulled off profits on gold. We've got our stop set at break even, so if it does start to roll over, we exit the trade with a nice gain, and we can reload, hopefully on some deeper correction, and get back in. And obviously, a lot of these sectors here, especially silver, very overextended. You look at the price range, what goes almost straight up usually almost comes straight back down. Look at the 30-minute chart on silver. It's just exploded up in price. And again, what goes straight up a lot of times can come straight back down for at least half of the move. So there's potential for a great opportunity, a nice consolidation and setup in the metals to form a big launch pad for the second half of this move. So whatever move we had here in silver, if it flags down, we could see this distance from the low to the high start again and go up to around the 22 and change in price. So this is not a bad thing. The market needs to consolidate here. The higher it keeps going, the harder it's going to crash coming back once it does roll over. So stair stepping our way up with bull flags is a very good price action for metals. Looking over at natural gas, up 0.3%, trading up near yesterday highs. Overall, it is trusting right into this resistance zone, which is one of the reasons why we scaled out. We've caught this beautiful move where it started to rally up, formed you could argue here an inverse head and shoulders formation with a bull flag here. We got long. We've caught this beautiful move into resistance. We got about almost 10% on the play. We are out. It could very easily have a couple big red down bars and consolidate. We'll look to get potentially long again because this could be forming a much larger basing formation that once it breaks above through this level, we could see it really off to the races to the $3 mark. Looking over at crude, relatively flat day, but overall crude is still trading in this big range. It has very neutral bias. It's trading sideways. The question is which way is it going to break? A lot like the equities market. Whichever way it breaks, the size of this box will be the size of the next breakout. So it'll have a move somewhere up to 61. If it breaks to the downside, we're going to see that 51 low get tagged, but it could break down. And if it does break down, I think we'd see more panic selling and could drop all the way down to that potential $44. So these are the kind of the box windows of the breakout initial thrust, and then from there it would consolidate, go higher, or drop down, consolidate, and go lower. Looking over at the US dollar, dollar is down pretty big again today. More or less, it'll be gapped higher 2 days ago, sold down yesterday, gap lower, sold down today, selling down big again. And even though the dollar is falling, we're not seeing metals move up at all. And we're seeing really gold and the dollar move together. Money is flowing out of the safe havens, dollar and metals at the same time. So it's a kind of a decoupled from what we're normally used to seeing. And I've seen this happen many times before. It is still normal. It's just not the actual norm. But overall, the dollar more or less hit our 99, 100, or 100 level a couple days ago, and it's a pretty significant resistance area. If the dollar does start to collapse here, we're going to see metals eventually hold up really well and start to take off in due time. But right now, everything is overdone on the safe haven side, and money seems to be piling into the equities today going forward. Anyways, that's it for now, and I'll talk to you in a little bit. Bye-bye.